Hello, everyone. This is another market moment with Randy Williams Gurian. Hey, thanks for tuning in today. It's been a kind of a rough start to the year with the Fed focus on raising rates and trying to stop some of this very high inflation data that we're getting with prices of oil has gone up, the prices of food have gone up, prices of essentially everything's gone up as we come out of hopefully the pandemic here. And the Fed's got to try and slow that inflation down significantly, and hopefully by raising rates. In the past, that's been something that's helped slow down the inflation. But I think it's really taken its toll. We're seeing it more on the NASDAQ. And what happens in this part of the cycle, based on my experience, is that investors start to look at what is the higher rates going to do to earnings, and then they take the stocks that were trading more on momentum, call them the high flyers, out to the woodshed and really penalize them. And we've seen that with about over 30% of the stocks on the NASDAQ now are trading 50% below their 52-week highs, and that has been happening since about November, and it's reached kind of a heightened state, I would say now. And then also we're seeing the big cap, mega cap technology stocks pull back, but they're pulling back 10 and 15%. So I think as an investor, you need to ask yourself, if you're going to play the high flyers, you're going to have to deal with the consequences. Those companies don't have earnings. If you're going to play the mega cap tech stocks, they will pull back in a correction, which I think that's what we have here. This is not going to lead to a bear market, but they also have earnings, so I think they'll go down less and come back more. So I think you really need to think about that as you look at the markets. I think the financial stocks are tricky. As rates rise, they can do well, but you have to be really careful. The banks all have books of businesses, and you just don't know what's in that book of business until the bank tells you in terms of defaults. And when rates go up, we see more defaults. So what they might benefit from higher rates, they also have to look at their book of business and see what might be in there. So that makes investing in banks, I think, challenging. Anyway, I hope you enjoyed this market moment. Happy 2021, and I hope 2022 brings everyone. I think it's going to be full of challenges, but I think it can work if you know kind of how to balance your portfolio, and hopefully it'll bring everyone kind of what their expectations are. And I just think those expectations need to come down because we've had 4 really good years for the US stock market. All right, thanks for tuning in today, and we'll talk to you next week.